Do you owe money on credit cards? More than 1 million Americans have credit card debt, so you're definitely not alone if you do. Here in the US, the average household owes over $8,900 in credit card debts. The higher your credit utilization on these credit cards, the more it tends to drop your credit score. If you could pay down your credit card utilization, you will see a pretty nice boost to your credit score. It could be 40 points, it could be over 100 points. And I speak from experience here. Years ago, I had mounting credit card debt, close to $35,000 worth. What I did was I took out a personal loan and I used that personal loan towards debt consolidation. I paid off my credit card debts, and boy, did it boost my credit score by close to 100 points. And at the time, I did not have good credit. So in this video, I'm going to talk about the personal loan that helped me to pay off credit card debt and improve my credit scores and honestly, my life, and how it can do the same for you. Now, I've posted the link to that loan in the description and the comment section for you so you can check it out for yourself. Now, before we begin, I'd like to ask that you please subscribe to my channel to learn how you can fix your personal credit, repair your personal finances, and hey, make more money, because I'm going to be talking about side hustles. The goal here for everyone that I would like to see is for you to be leveling up here in the next 12 months. The personal loan that I went with is called Upstart. In my opinion, it's a great option if you have a credit score of about 580 or above. Now, it's a lending platform that connects you as a loan applicant to multiple lending partners to see which ones will come back with the best options for you. You could qualify for up to $50,000 with repayment periods of between 36 months to 60 months. Consolidating debt with a personal loan from Upstart can get you an APR as low as 3.095%. Now, the higher range is 35.99%. This is going to depend in part on your credit score. They have a pre-qualification tool, and I've linked that in the description and in the comments below so that you can see what you pre-qualify for. And it is a soft inquiry, so no hard inquiry, no impact to your credit. Now, ultimately, they are looking at your TransUnion credit score. I believe your FICO 8 and then also your TransUnion Vantage 3.0 score. So yeah, think Credit Karma. If you have Credit Karma, go check out what your TransUnion score is and see if it's at least around a 580 or above. So, with this soft inquiry, you're able to check your rate without any impact to your credit. If you accept the rate and decide to proceed with an application, at that point, Upstart will do a hard inquiry and it's on TransUnion only. If you take out a loan with repayment options, it will be reported to the credit bureau. So it's going to be really important to make those on time payments and start building that payment history. Now, they do, as I mentioned, have flexible credit score requirements, and they actually tend to be more friendly to those with lower than average credit scores, like a 580. They don't just look at your credit score, though, they also are looking at your income and your work experience. Their personal loans can be used to consolidate debt, which is what I did. And this means that you're using the loan to pay off things like credit card debt or maybe even other installment loans that you have. With me, I used the loan to pay off my credit card debt, starting with the credit cards that had the highest APR rate. The nice thing about Upstart is that they have a fixed rate APR, meaning that you're locking in your interest rate for the duration of the loan term. And that means that your monthly payments won't vary. Now, there are some loans out there that fluctuate with their APR rate, and that makes it harder to budget because you don't know what your monthly payment is going to be to the T on a month to month basis. Your monthly payment could change with one of these loans that has more of a flexible, fluctuating APR rate. Another huge perk with Upstart is that they can get you funded in as little as one business day once you are approved. And as long as you accept your loan by 5 p.m. Eastern Standard Time, you will receive your funds the very next day. Listen up if you have a bankruptcy, providing that it's a Chapter 7 bankruptcy and it's been discharged, it's possible to qualify with Upstart. Now, they do have an origin fee of 0 to 8% of the loan amount, you get approved for. And that fee is automatically withheld from the loan before it's delivered to you. Now, while some loans have an early termination fee, Upstart does not. Personally, I would stay away from a loan that actually penalizes you for wanting to pay it off early. And as I mentioned, the term lengths are 36 to 60 months. They do tend to offer higher credit odds, meaning approvals, compared to other lenders. Let's touch base real quick on how debt consolidation works. So, with a personal loan from Upstart, they're going to deliver cash directly into your bank account, which you then use to pay off your existing debt. Within 30 days, you'll start making a fixed monthly payment on your new loan until all of the debt is paid off. Most personal loans come with fixed rate APR. So, as I mentioned, your monthly payment stays the same for the loan's lifetime. So, how does debt consolidation hurt your credit score? Well, consolidating your debt into a personal loan can have a positive impact on your credit score and your overall finances. I know it did for me, but again, it's important to understand the process so that you can ensure the greatest benefit. Debt consolidation will impact your credit score and credit report in some of the following ways. It does add at least one hard inquiry to your credit report, but it's going to add an active installment loan to your credit report, and you get rewarded for having a mix of credit. Your monthly payments will be tracked and reported to the credit bureaus until the loan is paid off. So you're building up that positive payment history. Your credit utilization ratio will drop when you move your revolving credit card debt onto the new installment loan, meaning you are paying off your credit card debt. You can keep your credit cards open even after you take out a debt consolidation loan or a personal loan, but I'm going to call it a debt consolidation loan if that's what you intend to use it for. So once you pay your credit cards off, keep them open because you're still rewarded for the length of time that you've had these credit cards. Just ideally, don't use them. Put them away if you have to, so that you don't rack up credit card debt again. Don't close the accounts, but put them away. Also, once you're approved for a personal loan, make sure you avoid making a late payment since payment history holds the biggest weight in determining your credit score. One late payment on any line of credit can cause your credit score to drop tremendously. To avoid late payments, I honestly would recommend that you, one, know your payment due date, and two, enroll in auto pay. If you found this video to be helpful, please like it and subscribe to it and stay notified to more helpful videos like this.